Welcome back. Let's take a look at how markets are performing now. There's been a slew of economic data coming out of the United States, including some company news as well, including the likes of Twitter, which came out with better than expected earnings there. That revenue jumping up around to $800 million on that front there as well. So that boosted that share price. And it seems that things have certainly done well across the board. But it wasn't a sentiment that was shared with the likes of Asia, however. A bit of a mixed picture for most of the day out in trading out in Asia. The Shanghai composite was slightly higher at around 0.1% to the good at 3,201 points. The Nikkei is sitting at 22,182. That's 1/3% lower, however, with the Hang Seng out in Hong Kong, 2/3% lower as well, in the red at 29,757. Let's head on over to the United States now, where the S&P 500 and the Nasdaq registered record closing highs after a broad-based rally on Tuesday as a clutch of better than expected earnings reports eased concerns about a slowdown. The Dow Jones Industrial Average rose 0.5% to 26,656 points. S&P 500 0.8% better off, 2,933, and then the Nasdaq Composite adding 1.32%. That's 8,120 points. Not a good day on the JSE, however, thus far. It's sitting down around 0.5% at present. Things aren't necessarily going as well as one would have thought, considering the positive sentiment out of the United States yesterday with those earnings results. So things aren't necessarily coming through to the local market and impacting us as well as we would have liked. Even the international markets, a bit of a mixed picture. Yes, the DAX and the CAC 40 out in France doing a little bit better today, but the FTSE 100 in London not performing as well as one would have certainly hoped. That picture, of course, Brexit woes continue to sit within that economy, but we'll continue to see how things fare. While we continue to unpack that market picture too, you'll see that the JSE all down today. Industrials sitting down around 0.1%. The resources as well sitting around 0.8%. Financials, the hardest hit thus far. That's 1% lower at present, sitting at 42,762 points. Continue looking at these as well. You'll see the resources, as I said, going down. Gold stocks headed down 1.33% thus far, with platinum counters also in the red as well today. That commodities picture has been one that we've continued to look at, right? And predominantly because of that oil story hitting that 6-month high near $75 a barrel. It is slightly down now at $74.47. Platinum headed higher, but still below $900 a fine ounce. And there we go for the price of gold, $1,271 a fine ounce. So that is the sentiment and the picture there, even for the currencies. The rand weakening from that 14.24 that it had overnight, now at 14 rand 35. So the weakness still settling in, and perhaps it's just a stronger dollar more than it is about a weaker South African currency, and that is certainly cast in stone across the board there when it comes to the euro as well. So let's unpack that market picture now. Michael Traherne joins us now, and he's from Vestag Asset Management. He's live at the Johannesburg Stock Exchange for us. Michael, thank you so much for the time. Nearly 0.5% down for the JSE at midday. Trading all red right behind you. Clearly, we aren't following the sentiment out of the United States with those positive earnings results, particularly Twitter.
Yeah, exactly. So as you said yesterday, US markets finishing in the red, in the green at record highs. It's probably worth noting that between the 1st of October last year and Christmas Day, the US markets had dropped 20%. And since then, they've now recovered all of that plus some. And it just shows you how volatile stock markets can be and why it's important to be in stock markets for the long run. Having a look at the moment, though, I think it's more just profit taking. And the JSE all shares less than 1% away from 60,000. There's only been a few occasions where we've been higher than that. So we also near record highs. And I think it's just a case of guys taking a bit of profit off the table, even though I don't like that term, but I think that's the case that we're seeing today.
You're a bit surprised that we are headed a little bit higher when it comes to the general overview of the market, headed towards 60,000 points. Yes, not that all-time high level of around 60, 63, 64, if I'm not mistaken, but certainly headed higher. Is there any real impetus, or is it just because we come from a low base?
Yeah, it's a low base. Weaker currency also tends to help our markets a bit because of all our dual listed and internationally traded stocks. But by far the biggest contributor at the moment has been Naspers, which is at a 12-month high, almost near its all-time highs. And when Naspers is doing well, the overall market's doing well. and you can't escape the two. And that's part of the reason why Naspers actually wants to start listing in Amsterdam, is to try break that connection where Naspers is so influential on what happens in South Africa.
Yeah. As you mentioned, Naspers there, I just wanted to quickly take a look at how that share price is doing today. As you said, it has been a great time for it of late, and today it's up 0.75% at 3,700. Is the valuation still firmly above 4,000?
Yeah, I mean, in that number, you've got to add back the 130 Rand that you're going to get for the multi-choice shares that was spun out a few months ago. So effectively, it's over 3,800, where its highs were, I think, 4,100, 4,200. For it to get back there, though, we need Tencent to be above 400 Hong Kong dollars a share. It's almost there, and that's the reason that Naspers has rebounded, is because Tencent has rebounded in China. Concerns around regulation in China have been subsiding. Strong economic data out of China last week also adding to the impetus. And then just a weaker Rand in general means the Tencent share or Tencent stake is worth more in Rand. So all these factors are contributing to a stronger Naspers, which then contributes to a stronger all-share market.
Yeah, we talk Naspers, we also talk Twitter, and I know I'm jumping around here, but Twitter in itself coming out with a good set of higher revenue on that front, even more users. It just keeps on giving by the looks of things.
Yeah, and the stock price jumped 15% after the results yesterday. It's, I suppose, you either love or you hate Twitter. For us financial types, we live on it. It's how we get our news quicker than anywhere else. But one of the main features of these results was that Twitter said they focused on getting rid of the bad accounts. So all your spam and those trolling bots that make the user experience unpleasant, they focused on getting rid of those. So someone like yourself who's got tens of thousands, or I think you've over 100,000 followers, you would have noticed a drop in followers when they purged the negative and the malicious accounts, and that's actually what's been contributing to better performance from the company. Better user experience leads to more ads, leads to more money.
Yeah. Okay, let's talk about that oil story very quickly now. Donald Trump sets those waivers away and says no more, and any country that takes on Iranian oil will get a sanction from Washington. That the price of oil then shoots higher. Does it continue in that trajectory, or do you see it perhaps coming off that base a little bit more because somebody else will step in and take on the mantle?
Yeah, so interesting enough, oil bounced off $50 in December last year. We're now at 75. That's a 50% increase. It's not great news. In general, supply and demand at the moment, there's more demand than there is supply. As you said, tensions between the US and Iran doesn't help. OPEC, which is mainly at the moment where Saudi Arabia has agreed with Russia to cut production, that hasn't helped things. And then Venezuela, one of the bigger producers, also struggling to get its oil out because of political tensions and just falling infrastructure. So definitely in the short run, the pressures towards the upside. But I think long run, most of these countries are mostly targeting $65 to $70 a barrel, and that's probably where we'll settle in the long run. But for the short run, not good news for the consumer, particularly because the South African Reserve Bank, in their forecasts, have oil at $65 going forward. We're currently at $75, and that means no interest rate drops anytime soon, in my opinion.
Yeah. Well, that's a sad story there with regards to those interest rates, but nonetheless, we'll have to take it as it is. Michael Traherne, appreciate the time as well from Vestact Asset Management, live from the Johannesburg Stock Exchange. Making note, of course, of that oil price, which we'll touch on as well a little bit over here. As we said, $74.47 at present, but it had hit around $75 a barrel. That's a 6-month high for that oil price. If OPEC does indeed decide that it will perhaps raise some of its production in order to help the fact that Iran steps out of the situation for a little while, indeed it would average out or maybe change the scenario with regards to that oil price. But for now, it does sit where it is. What it means for the United States, however, is that it can now produce more and now give out a little bit more to the rest of the world. Perhaps people will take it on, but oil is very special because you cannot take on just any sense of oil. But we'll continue to see how the story unfolds, and we'll unpack it for you right here on Market Sense. Please do stay tuned to this, and we will continue to unpack more news right after the short break with Nzinga. Goodbye for now.